On the floor at the CME Group. Todd, I know you want to kind of clear up the a soybean number there, that the 861 on that low on beans right now, but still you like where beans are, I guess, is the bottom line.
Yeah, I do like where beans are. I must have seen a bad print mark when I looked to make sure, and I thought that I saw the low, but obviously 861.25 is the low. I'm a fan. 850 and above, I want to be a buyer. So anytime we pull back to 850, I'm looking to jump in and buy some more.
Very good. So we'll clean that up. All right, over to livestock. We know you've not been friendly to the cattle and feeder cattle trade. We're lower here again on the day. Live cattle, the February, looking at that, nearly $1.50 lower now. Talk about this beef complex and what you call the space in here, which you don't like very well.
I think they go lower. Look, there's no reason for them to still be even at these prices. At these reduced prices from where we came from, we got a lot more room to go on the downside. The charts are telling you that. The economy is telling you that. Everything is telling me that there's going to be more supply. There's going to be lower prices because, again, A, the consumer can't afford to buy them, and B, we're still a little bit pricey for the overall market. I would not be surprised to see a little bit of a bounce, but anywhere up to 168 in feeders, I'm going to be a seller. And live cattle, 133 to 135, I'm a seller. Anytime we go there, go ahead, I'm sorry.
No, I'm going to, well, okay, I want to put something, you mentioned, so all the bad news in the grain complex, you said, so where can it go? Nowhere but likely higher in your view, but we've thrown all that bad news in the beef and livestock trade as well. Why can't you get a scenario where it can move higher from here too? Why doesn't it work both ways?
Great question. It does work both ways, but look at where we came from. Remember, beef was way up in the stratosphere. I mean, we had feeders over the 230 level, and we had live up in the 170s not that long ago. So they were already being squeezed because of the farming problems, because of the drought, and because of everything else that was going on. So that market was already being squeezed, and it reached a pinnacle. It hasn't taken the move to the downside. Just now is it starting to move lower. And again, when you look at what's fair and equal price to a consumer, the consumer cannot afford to eat this kind of stuff because it's too expensive. They're priced out of the market. So if the average American, if the middle class isn't going to go in and buy beef and better buy something else, then what is it going to do? It's going to build up a supply in the beef market, which is going to bring prices down. Yeah. That's what I expect to happen.
And the cold storage report did indicate that, yeah, a record amount of total red meat for the month of October. Well, before we leave you here, a quick thought in the pork complex. Pork has been lower on the day, but not nearly as much. Your thoughts there?
Well, I think pork looks good over 57. Remember, we were watching 56, 57 as we churned back and forth last week. Anywhere, if you can buy it back near 56 or 57, I think that's a spot that you want to look to get in here. I think that makes the right level to look. And again, I'm looking at this as a longer-term scope, and as I look out into the charts of the future, it looks better that way.
Very good. Todd Horwitz, as always, thank you very much for the comments, and we believe you're back with us tomorrow, so I'll wait till then to wish you happy Thanksgiving.
Thanks, Mark.
Okay, thank you. Todd Horwitz, live from Chicago, as we